Yeah, so Arinze, are you there? Are you there, Arinze? Oh.
Good evening, Professor.
Here already. Yeah, let me make you a host. Okay, so you're making you a host. So that means you can't leave. And I've already connected to YouTube Live. So you are now the host, correct? Hello? Can you hear me? This thing is muted, Narinze. Okay, it seems that, hello, Arinze, are you there?
Yes, I'm here, sir.
Okay, did you hear what I just explained? So if your network is having
No,
problem,
it's not my network at all. It's not
okay,
my network.
So I will connect through YouTube Live. So that means that I will sign out from here. I'll connect through YouTube Live. So that means you need to be permanently on so that you don't shut down the section. So another thing
Yes.
you can do, you can also make Ayodele a co-host just to make sure that if your network has an
Okay.
issue.
Get ready. So I'll just make him ready.
Yeah. So just make him a co-host so that we don't lose the network. Okay. So
Yes,
I'll be on
I've done that.
YouTube Live. All right. Bye-bye. Talk to you later. Bye.
Okay, sir. Bye, sir.
So when our faculty comes and we can start, I think he's already here. And he's already here. Mr. Lawal is already here. And so
We have
just,
two faculties for today.
yes, we have two faculty and they are coming.
Wow,
So,
30 minutes overview, 15 minutes for each.
yeah. So you still have about 4 or 5 minutes to start. I'll be on YouTube Live. Cheers. Bye-bye.
Okay.
Mm.
Good evening, everyone. Can you please confirm that you can hear me?
Yeah, good evening, Arinze. Can hear you.
Okay, thank you very much. Good evening, faculty. It's wonderful having you once again here. I'm very sure that it's going to be a powerful session. If we start the way it's going to be a very insightful session. I mean, I've I don't think I've recovered from the last one. That was retention. So, yes, I'm also retention. So, good evening, sir. Okay, so we'll be kicking off right away. We have two faculties here, and good evening, everyone, and welcome to this edition of Tekedia Live. Please confirm that you can hear me.
Yeah, we can hear you. Right.
All right. Good evening, faculties. Today we'll be having Azeez Lawal as well as Ibraheem Babalola. Good evening, sir.
Yeah, good evening.
Good evening. Thanks for having us.
Thank you very much, sir. Okay, so without wasting much of our time, they will be taking us on an excursion on capital market operations and startup funding. Okay, so typically during the live sessions, we focus more on question and answers to help our members get proper understanding of the concepts being discussed. So,
we're going to be doing is that we're going to have a total of 30 minutes overview. Yeah, so both faculties are going to spend 15 minutes each, giving an overview into what they are going to be discussing. And after that, we open the session for question and answers. Yes, so over to you, faculties. I don't know who goes first.
Ibrahim.
It definitely has to be. It has to be Azeez Lawal. You know, the main core of the gist is from his side. You know, which is the more traditional stuff. You know, and once we get out of the way, and then I can then bring it home with startup funding. You know, and speak more to that. How does that sound?
Yeah, of course, look, it sounds good, right? Yeah. So permit me to stay on video for now. Then Tekedia Institute host, I should address you by what? What's your name? Sorry.
Arinze. Oh, pardon me. This is Arinze.
Oh, Arinze. Oh, very well.
Yeah.
Oh, it's still you, Arinze. That's good.
Yes, it's still me. Yes.
Yeah. Yeah. So permit me to stay off video for now. Yeah, then
Okay,
I want to believe that some of the participants here, they've gone through the slides before. So I don't have to
yeah, we
start
have
boring
both
them
of them.
what's on the slide.
Yeah. Just an overview. Fine.
Sorry?
Yeah, I said that's not necessary.
Okay, very well then. So, but then let's do some introduction around capital market generally. So typically, like any other markets, you have the buyers and the sellers. In this case, we are selling capital. Typically, we call those that need the funds at the very high level capital market level, we call them issuers. And those that want to give the funds, we call them investors. Depending on the type of fund that you need, yeah, you could have equity capital market and debt capital market. Equity capital market, I mean, you basically give a unit of your company to whoever is invested or interested, depending on the platform or the kind of instrument you want to use. It could be via IPO. Maybe you're coming to the market for the first time. You're still a private company and you want to go public, or it could be via private placement, special placement, where you're an established company already. You just want to give your shares to a selected few. Then, of course, when you talk about the debt capital market, like now you're talking about bonds, corporate bonds. And as we are all aware, just like individual startups go to the capital market for funds, government comes to the capital market for funds too. So like just the way you have for debt capital, you have corporate bonds, you also have bonds for federal government. Then, I mean, we can also talk about the capital market from the angle of coming in primarily, or you have raised capital before, but you want to provide a platform or the opportunity for those that have your shares to exit. I mean, so we can now talk about primary market and secondary markets. The first one was by equity and debt capital, but now we're talking about primary and secondary. So an example of primary market is when you're doing your IPO. So when you want to do IPO, it's an example of primary. So let's say someone now comes into your company via IPO and wants to exit subsequently. Then we'll be talking about secondary markets, a platform for those that want to exit your company for different reasons. You have the New York Stock Exchange, you have the Nigerian Stock Exchange in Nigeria. Then, of course, you also have OTCs, over-the-counter markets. So basically, those platforms provide opportunity for existing shareholders to exit your company. And you can also have the same thing for secondary market transaction. You can also have the same thing for debt capital market. Yeah, talking about debt, it's an interesting time for fundraisers in Nigeria now. Yeah, at an all-time. Historically, I'm not sure. I mean, in the last 20 years, I'm not sure debts have been this cheap in the Nigerian capital market. So, in that regard, I'll go to treasury bills. Typically, treasury bills, it's a money market instrument, but then it measures the pulse of. You can also use it to determine the pulse of debt in the capital market. So, what do I mean by that? Treasury bills is an instrument that government uses to raise money over a short period of time. Around January last year, if government wants to collect money from you, they can give you as much as 15%. So treasury bills was very hot. So you have every other person, you have billionaires, investment managers with trillions. They just easily go and buy government treasury bills because no risk. You're sure government is going to pay you back. And January 2019, February 2019, you could do as much as 15% for that. But guess what? As we speak presently, if you take money to government and you want to buy treasury bills, what government will be offering you, depending on the tenure, you have 91 days treasury bills, 182 days treasury bills, and you have 364 days treasury bills. As we speak now, if government wants to borrow money from you via treasury bills instrument for 91 days, they're probably going to give you 0.035%. Listen carefully, 0.035%. I mean, that is not even up to 0.1%. I'm talking about like about this time, like not about this time. January 2019, February 2019 could do as much as 15% with that instrument. And as that, by this time last year, you could still get as much as 7%. But then, so the government in place now, they are bent on fund owners, fund managers, bankers. They are bent on them giving money to the real sector. By the real sector, I mean agri sector, construction companies. By real sector, I mean like take risk. The startups who need money, who need funds for their businesses to start their businesses. It's an interesting, it's really interesting period for as far as debt capital is concerned. It's very, very cheap to raise debt capital now, but then that's the market generally now. That's the market generally. Yields are at an all-time low. Like from my own experience, I'm not sure there's been anything like this in the last 20, 30 years. So much so that yields are not getting into the negative region. A situation whereby SCOM government is saying that SCOM practically, like if you give us money, we are not going to give you anything. That's what it means. I mean, these same people, like 24 months ago, if you give them money, they give you 25 or 15% on the same instrument, treasury bills. But now they are saying we are not going to give you anything practically. So to tell you that government is more like, okay, fine, the so-called bankers, like go and give your money to businesses who need them. So that's the idea. But then don't forget that government also comes to the capital market. Yeah, government wants to borrow cheap too. That's the signal. They want to borrow cheap too. So that's why they are forcing those youths down. But regardless, it's good for everybody. When I say government wants to borrow cheap, look at, for example, we need the proposed budget for 2021 is about 5.2 trillion. Sorry, has about 5.2 trillion deficits. What it means is that typically when your deficits, okay, fine, you have expenditure of about 10 billion naira, for example, and the much you can get from your revenue is about 5 billion, for example. So you have a deficit of 5 billion naira to fund your expenditure. So that's called a budget deficit. So that's the situation that we have in Nigeria. And apparently it's very difficult for the government to go abroad to go and raise money. If you've been hearing forever in the last couple of months now, they've been struggling to get 1.5 billion naira from World Bank. So it just makes sense to borrow money locally. So if you can force rates down locally so they can borrow cheaper, that's good, right? But the good thing now is that it's good for everybody. Because even now, if you're a big corporate and you have existing loan with banks, it's a good time to go and meet your banks. That's come. I'm currently paying 20%. Based on the realities now, I want you to slash this rate from 20% to 15% or 10%, or else I go to another bank. Because if I pay 20% somewhere now, you can be very sure that you can get 15% or 10% somewhere now, somewhere in this same country. So that's the reality of the capital market as far as the debt side is concerned. Yeah, on the equity side, I mean, so equity capital, especially for the primary market, you want to raise equity capital for the very first time in Nigeria. I mean, there's been no IPO in Nigeria forever now. And though you've had fresh listings on the Nigerian Stock Exchange, you've had Airtel come to the stock exchange, you've had MTN come to the stock exchange. You've also had people like Boa, very vast listing. But then these guys did not come through IPO. I mean, they've had their shares before. They just came to the market to provide liquidity for their investors and, of course, visibility as well. So equity capital, it is, I mean, it's not what you see. It's not very popular as far as big corporates are concerned to raise money. I mean, the confidence for equity market is still very, very weak. That's on the primary side. For those that want to raise fresh funds via equity. But then we still have a couple of private or special placements. So unlike IPO, you can raise equity via private or special placement. I'm talking about specifically for corporates now. So special placement or private placement is basically where you have selected high net worth individuals or institutions who are interested in your company, then you approach them to raise capital instead of selling it to the entire public. I mean, private placement is also available for debt capital too. I mean, typically, when you want to raise debt capital, specifically now, I'm talking about big corporates. Ibraheem will provide more context around startups. So specifically for big corporates, if you want to raise debt capital, now I'm talking about corporate bond. I mean, you can get as much as low as between 8% and 15%. In that regard, I mean, hearing 8 and 15%, I mean, that's going to sound like, is it that low in Nigeria? So talking about debt capital, when you want to raise debt capital, you can either go to the bank or you can meet a financial advisor who helps you package your company to go via the corporate bond route instead of going to take bank loan. So when we're talking about debt, you can either go to the banks. I mean, typically the banks, they will always tell you come and do 28%, 15%, 18%, except that now even their own rates too are very, very low. It's not more the traditional very high rate because generally rates are down. So that's basically it as far as debt capital is concerned. But the interesting thing now is that even startups now can raise equity capital via the Nigerian Stock Exchange. So on the Nigerian Stock Exchange, you have different platforms. The Nigerian Stock Exchange is a marketplace. It's a marketplace for those who need capital and those who want to exit from their investment. So it's a marketplace for governments, it's a marketplace for individuals, it's a marketplace for startups, it's a marketplace for corporates that have been around for 60, 70 years. So you have different companies, you have the Dangotes of this world, you have the Nestle's of this world that are probably older than our grandfathers. You have MTN, you have Airtel. Think of any of the banks, except for some few banks. Most of the banks are on the Nigerian Stock Exchange. Talking about Zenith Bank, GT Bank, First Bank, Access Bank, Fidelity Bank, they are all there. So it's a marketplace for everybody who needs capital, who wants to exit current position. So based on that, based on the level of the company and maturity of the company, so you have different classifications on the Nigerian Stock Exchange. So you have companies that they say they are on the premium board. You have companies that are on the main board. Then interestingly, because of the reality around us, that now it's not necessarily the big corporates that pull the funds now in Nigeria. Even the so-called small young startup pull the funds now. And we are all aware, of course, the very popular recent one is that of Paystar that got as much as $200 million. And because of that, the Nigerian Stock Exchange has now created another platform. There was that platform already before now, but then they kind of took it to a level that will reflect the realities of startup and their fund needs. So it is called Growth Board. So you have the main board now. You have the premium board for the Dangotes of this world. Then you have the main board. Then you have Growth Board. So that Growth Board, there are different requirements for the different boards. But the Growth Board, let me not bore you with the requirement, but maybe when we get to questions, we can talk more about that. So the Growth Board basically is for startup who wish to list on the Nigerian Stock Exchange. Listing on the stock exchange has many benefits. It gives you free visibility. It gives you access to capital. It also provides the opportunity for your current investors to exit when they want to exit. So on that note, I'll pass the baton to Ibraheem to take it from there. Brian.
All right. Thank you very much, Mr. Azeez Lawal. That was an insightful overview. And without wasting much of our time, we'll just go straight to Mr. Ibraheem. Over to you, sir.
Thank you so much. Do you require me to put on my video?
If you would like to share that with us, we're very grateful to receive it.
Okay. Hey everyone. Good evening. Well, it's afternoon my time. Thank you so much for having me. I'm gonna start off from where Azeez finished from. One of the things that he said is that there hasn't been a better time to raise funding as a Nigerian startup. And I completely agree. In 2015, the whole of the continent did I think about $185 million in the whole of 2015, the whole of Africa. Industry alone raised $200 million. Which just shows you the difference from where we're coming from in terms of raising funding as a continent and where we are now. Now you're hearing announcements. Flutterwave did $35 million in January. Cheaper Cash has done about something similar, just something close. OPE is a bit of an outlier because you can argue that it's a Chinese business, but OPE announced $50 million, $125 million last year as well. Which just shows you where we are now. Albeit they're very, there are some hot sectors. So you say fintech, right? And you see the number of activity that has happened there. but even when you go beyond that, you also see that we are able to raise money easier, faster now than say 2 years ago, or say 3 years ago, or 4 years ago. So I completely agree with him that I think there's been a better time to raise funding as a startup in Nigeria or in Africa. So here's where I'm going to start from. Just going to pretend that a lot of people here are entrepreneurs and are looking at ways to raise capital for their business. So what are your options? First off, always have the option to bootstrap your company, which is you don't take any outside funding or outside debt, and you just use your own sweat capital or your own money, and bootstrap it. Or second option is to crowd fund. So you get a bunch of people, and you have the crowdfunding platforms that you can use as well, for your startup, for your business, or your project. Family and friends, which would typically be the first point of call when you start saying, okay, you know what, I want to raise equity funding, as a startup. Then you say you go to the family and friends options, and then you can go to the angel investor route. Angel investors typically cut smaller size checks, as compared to, say, your traditional VCs. And then if you graduate from the angel investor route, then you go to traditional VCs. VCs are looking into our direction as a continent now more than ever. You have the CRE Ventures, TLC Capital, ETC, that are very, very, very active on the continent. And you also have local VCs like Ventures Platform as well. I think Ventures Platform is invested in Paystack, Triva Greek, and a lot of these companies. You have Lead Path as well. I think that's Olumide Boss company, invested in Paystack, Piggyvest, etc. And then if you're going from the VCs, you're looking for a bit more money, a bit more structure. Then you go into the private equity route, which Azeez has spoken about. And you can either raise equity or raise debt. So you can issue convertible notes or safe agreements. Y Combinator started and pretty much led the structure for safe agreements, and that's what the industry have been following. So safe means simple agreement for future equity. It's a bit different from convertible notes, which are just pure debt. And then if the business grows to a point where the trigger comes in, then the investors are able to convert into equity, or just get their money back. But it's a bit weird because I'm talking to myself and I can only see myself, and I'm hoping that this session will be very interactive. So I'm going to pause here, and then we can jump to a more interactive session. Maybe people want to turn on their videos or want to unmute their audios, and we can have a conversation as opposed to a lecture style session.
Okay, thank you very much, Mr. Ibrahim. That was an insightful session as well. Usually we have the question and answer session, and it's all interactive, but we just allow faculty to give an overview so I could actually give direction to the question and answer session. So we don't just have everything going out of this. Nonetheless, it's open for question and answer now. And our first question is going to be coming from Mayowa. Okay, we have his hand up. If you want to ask a question, please send them to the chat or use the raise hand feature, just like Mayowa has done. Mayowa, go ahead. We are listening.
Hello, good evening, everyone. So as the last speaker was speaking,
help us. Sorry,
Hello?
you could also help us direct the question. You could also help us direct the question to a specific faculty.
Okay, so the last speaker, I joined really late, so I didn't get his name. The last person that spoke now after Abdulaziz.
My name is Ibraheem Babalola. I am the CEO of Claim, the mobile payments company in Nigeria.
Oh, okay. Thank you, Ibrahim. Thank you so much. So while you were speaking, you did refer to Y Combinator's mode of investing in startup. You mentioned the safe. So the question is it that at the beginning, because usually the problem is valuation. So you put forward the valuation, the startup do not agree, or you don't even like what the startup is bringing forth to the table. So there's back and forth. Everybody's trying to agree or meet at the middle ground. So I want to ask that when Y Combinator, when they invest, is it that there's a discount, like they say, oh, maybe when you guys eventually value your company, you would issue the equity at a discount or something. So what's the modalities around the safe? It does sound interesting. I ran into it sometimes online when I was going through, how they operate and all of that, but I really didn't get the hang of it. So I don't know if you can just shed some light on it now. Thank you.
Thank you very much, Mario, for your question. So YC has a standard investment deal that they give you a startup, regardless of the stage of the business. I think it's $125,000 for 7% of the company, using a post money safe agreement. What they've done with this safe, so sometimes having term sheets, valuation, startups, it gets messy and there's a lot of back and forth, So the safe just enables YC to be able to invest very, very quickly in these startups, and then they can complete the transaction, quote and unquote, at a point where the startup is actually doing a funding round. That's why they then, they sign a safe agreement, a simple agreement for future equity. But they have standard deal size, 125K for 7% of your company. I think it used to be 100K before, but now it's 125K for 7% of your company. The safe agreement just lets them close this deal faster, because it can then convert at the point where the company is actually doing a proper funding round, not that they're going into an accelerator. I hope I've been able to.
Oh, okay, thank you. The question was actually to say that, when they put in money, after some time, the company uses the money and it is expected that they add value to the company such that the valuation, it should look better than what they had on the table initially. So the question is, okay, I'm Y Combinator, you've used my money to grow your business. So when I'm converting to equity, you've added some value, you've used my money. So how do I get, how am I well compensated for that? Because if I now come in at that higher valuation you had in the future, I'm getting, the number of shares I'm going to get will be reduced because the share price would have gone up compared to if I got the shares at this point.
No, so YC takes 7% of the business. If Dangote, and I'm using this
for irrespective.
Yes, like
okay.
if Dangote goes into a YC,
whatever your valuation is, they take 7%.
It doesn't matter what your valuation is, right?
Okay, thank you. All right, that's clear now. Thank you.
Yeah.
All right. Thank you very much, Mayowa. Thank you very much, faculty. We have this other question on the chat from Fagade. What's the due diligence that YC puts in place prior to investing? I think any of the faculties could take that. But that's specifically for Ibrahim. What's the due diligence that YC?
But I think that Michael Sybil, the CEO of YC, will be the best person to answer this question. But it's just like general due diligence that any accelerator would do. Check your incorporation documents. If you're post revenue, just check your numbers, and validate the numbers that you've claimed to have, right? But a lot of times, see, why when you get into YC, like they're actually there to help you clean up your entire structure and accelerate the growth of your business, right? So in terms of DD, it's just like incorporation to see that, you know, there is not a complicated incorporation structure of the business, validate the numbers that you claim to have, and that's, you know, and that's pretty much it. It's almost the same for a lot of the other accelerators as well, you know. It's completely different from if you are going to go and raise money from a traditional VC or even from a private equity company, you know. I've seen companies that raise from venture capital companies or venture capital firms abroad, and a team from the VC would actually visit Lagos to come and meet the team as part of their DD, you know. Someone just sent
A link.
a link, and but that's for a Series A funding. If YC was going to participate in your Series A round, and even that doesn't look so much complicated, but it's way less complicated if you were just going into the accelerator.
Okay. Okay, so we are open for further questions. Use the raise hand feature, send them to the chat. Emmanuel, go ahead. Okay, I don't know if you could speak closer to the microphone. I'm not hearing clearly from here. I don't know if that's only me. Faculty, can you hear me clearly?
We can
I can
hear
hear clearly.
you, but we can't hear him.
Okay, just go ahead.
Thank you. I don't know who is supposed to take the question, but the question goes this way. For the growing company that started yet to raise funds, and it requires, your startup requires huge capital investment in the sense that you're looking at, it's not it's actually a company that requires huge investment on the ground, probably manufacturing and production.
Arinze, we can add the in.
Okay, Emmanuel, I thought I was the only one here. So, Emmanuel, I don't know if you could type your question or get closer to your microphone. We can't hear you audibly from here.
Okay, I'll try.
I don't think that's the network. It's either the device or the microphone is not close to it. Try. Okay. Okay, I can hear you. Oh.
Okay, can I go ahead?
Yes.
Okay. My question is, for a startup that requires huge capital investment to get things running on ground, like let's say manufacturing and production, how do you go about raising your funds if the extent line of family, friends, and personal business and all of that cannot take care of the full startup, the basic process? How do you go about raising funds for that kind of capital, even when your product or service is validated?
Arinze, let Emmanuel type his question. We can't hear him. Let him type his question.
Maybe the moderator has just repeat the question.
I couldn't get the key parts of the question, so I'm even unable to reiterate it. Emmanuel, you'd have to type your question. We'll move further. Is there any other question? Use the raise hand feature. Emmanuel, just send in your question to the chat. I think that'll be better. It's from the device. I don't know why the microphone is not clear. Okay, send in your questions to the chat. Use the raise hand feature.
So I have a question for Abdulaziz.
All right, go ahead.
I'm with Ibraheem.
Yeah, so because you do more traditional capital raising, right?
Yeah, sure.
For traditional business, you know. And it's in terms of equity funding, it's particularly for companies in financial technology vertical, it's it's uh it's easier for us to raise funding now, right? Um uh the Paystack acquisition has even made us look more attractive, right? I think that that's the biggest uh acquisition in terms of size since the Vanso deal of 2016 when InterSwitch acquired Vanso for I think around $75 million. But how is it on the side of traditional capital raising and raising money for companies? So not debt. Now I know that it might be easier to raise debt financing because of the asset prices on the back of the Naira deval. But in for equity fundraise, what is that space like right now?
As far as equity is concerned, there's still serious lull. So it's still very, very, very dull, muted. So most of the deals are usually private placement and special placements, or maybe regulatory induced. For example, um, look at the insurance industry now. Their regulator, NICOM, has compelled all of them to recapitalize, just like you had for the bankers a couple of years back. So because of that, we are hoping that the buzz was really supposed to be in 2020, but because of coronavirus, yeah, but we are hoping that 2021 there'll be so much activity around equity capital raise. But generally, before now, in the last couple of years, there's been almost no activities as far as equity capital raise is concerned. What you just most of the time have is special placement, private placement. I'm sure you've not heard of any IPO in the last 10 years, like IPO where so more of what you have when you hear IPO is companies come to list on the Nigerian Stock Exchange for the first time, like the Airtels of this world, MTN, Boa Cement. But it was not like they came to the stock exchange to come and raise capital. They just came to list. So as far as equity is concerned, except private placement, even for big corporates, except private, quite a number of private and special placements, but not very, 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 very loud. I remember 40 billion special placement for Wema Bank in 2015, thereabouts. There have been a couple of other private special placements too. Then, of course, right issues too. Right issue, that's very common actually. Right issue, like you have 1, 2, 3, 4, 5 right issues every other year. So right issue basically is for equity investors who are already in the company, but the company wants more capital and it gives them the option of adding to what they have already. So, but generally, you can't say like, yeah, to a reasonable extent, it's still very buoyant, but not like it used to be. Not like it used to be. It's at the corporate, it's possible to raise equity capital, but most likely is going to be through special or private placement. The possibility of an IPO for now, because the confidence in the equity market is still, even though the Nigerian Stock Exchange has done so much in terms of regulation, like the equity markets, from what people used to know compared to what it is now, it's actually excellent. Like the products that the Nigerian Stock Exchange have come up with, the technology, the regulation, the flexibility, the ease to access capital. Like I said the other time, I mean, the whole idea of growth board, which the Nigerian Stock Exchange launched at the beginning of this year, was basically to create a marketplace for startups.
Some people had their hands up for a while, just so that we don't so we don't
that's fine.
So
that's the focus here. The focus here is the question and answer. So okay, that's fine. Okay, so I'll just go straight to Emmanuel's question on the chat. Okay, for a startup with huge capital requirements. Okay, you wanted to round up. Sorry.
No. I was going to say that we should take Chigozie. I will come to Emmanuel. We'll come to Emmanuel. Okay. Emmanuel's question is there. Let's relieve Chigozie with her hand.
Okay, Chigozie, go ahead.
That feels as though my hand is actually up. Good evening, everyone.
Good evening.
Okay, actually, this area of capital market, is not my strength, but I was at Zenith Bank yesterday to buy some shares, and they were like, I have to buy from a secondary market. So my question is, if I want to invest in a company listed on the New York Stock Exchange, what are the procedures for me to do that? And then some persons I'm talking about making money as an investor in these companies now. Then some persons talk about IPOs, like some persons invest prior to IPO of a company and they make more money investing. And some person invest during the IPO and during the exit phase or they make more. So I want to get, if there can be a clarity on that, I'll be grateful. I'm very new in this sector, so I want to know if there can be clarity on it. Thank you.
Ibraheem, there are two parts to this question. I'll take the first part, which is investing on the Nigerian Stock Exchange, and a part of exiting at certain stage because it came in pre-IPO or like you provide intelligence around that. Yeah.
Okay.
Yeah, for Nigerian Stock Exchange.
There's also a question on how to invest in companies abroad. So I can take that because there are actually some companies that are enabling that locally now, and they're quite interesting.
Thank you.
And then the question is all yours then. Yeah, fine. Go ahead, Ibrahim. The question is all yours then. You can take all parts of the question then.
Yeah, but sorry, I missed the first one. The one you said you wanted to take.
Yeah, the first question, like if she wants to invest on the New York Stock Exchange, how can she go about it?
So if you want to buy shares of companies that are listed on the New York Stock Exchange, so companies listed in the US, there are actually Nigerian companies, Nigerian startups that currently enable that. I think an example is RiseVest. So RiseVest, you're able to invest in companies on the New York Stock Exchange. Before there are some other ones as well that they, for some reason, the name fails to come to mind. But before the end of this, I'll just do a quick Google search and get some other options. But RiseVest comes to mind. So you just create an account and you fund your wallet with Naira, and they do the dollar conversion or something, and you'll be able to actually invest in this US equity, and be able to sell when you need to as well, you know. In terms of so what was the other question? I'm sorry. What was the other question? I just want to make sure that I'm not answering the wrong question. Still is it there?
Okay, yes, I'm here. I said some persons say investors make more money before the IPO, while some other persons say they make money after the IPO during the exit phase. So what exactly happens around this? How does the investment appreciate?
Thank you so much, Chigozie. Thank you, Samson. So there's Trove as well that you can use to invest in foreign stocks. So Samson, go for it. Just drop that in the chat. Investing in companies and waiting till the IPO so you can make a lot of money. Is that the question?
I don't understand how the appreciation comes in. Is the investment before IPO the better part of the investment or after the IPO?
See, it depends on what your risk appetite is as an investor, right? If you find out that the company is going to IPO, more often than not, by the time you find out that the company is going to IPO, it's already past the cutoff point for you to invest in that company or invest in a pre-IPO price. You probably be investing by the time you find out that the company is going to do an IPO. You probably be investing at the IPO price. And if you're investing in a company with the hope that they will one day IPO, again, it depends on your risk appetite as an investor and your belief in the business that it will get to a point where they would actually go and list on an exchange, whether it's the Nigerian Stock Exchange that this is very, very conversant with, or the New York Stock Exchange or London Stock Exchange. So again, it depends. If you say what is the difference in terms of capital appreciation, you can use Jumia as an example. I think Jumia listed at $13 per share or something, or 14. I'm not sure which it was, and the share price post IPO got to as low as $3, if I'm not wrong. So an investor that invests at IPO, at Jumia's IPO, and panics would have lost a bit of money. And then it went on a rally as well. It went on a rally, which is going down again because they've just released their numbers, and they're making less loss, but I don't think that they hit analyst expectations. So a lot of times it depends on your understanding of the business that you're trying to invest in, what you think that their future potential and financial projections of the business is, based on your understanding of the business, your understanding of the macro space, how you think that could impact on their numbers and the growth of the business, and you being able to go the long haul till the IPO. Or you can just invest in companies that have already IPO'd, that you understand them and what they're doing. So companies that you believe in their fundamentals. That would be my advice for you.
Okay.
Azeez, I don't know
Thank
if
you so much.
anything that you want to add to that.
Yes, I was actually going to say that, so equity investment, like Ibraheem noted, your risk appetite, then you should have an objective, then you should have a reasonable definition of how long you want to stay invested. If you have those three boxes ticked, like, you'll be fine. For, like you said, that, if you have an investment horizon of like 2 years on Jumia, for example, even when the price was dropping, like, you won't panic, you will stay. And if it came in at $13, for example, the shares of Jumia went below that at some point, and presently is in above $20 thereabout. So, your risk appetite, your investment objective, how long you want to stay invested, those three things are key as far as equity investment is concerned. And equity investment, whether in the United States of America or Nigeria, the risk is still, it's a variable income instrument, so it's still very, very, very risky. So even if you're investing in Nigeria or outside Nigeria, you still have to take care of that risk appetite part. Then, I mean, by way of marketing, like except if you are not in Nigeria and you are more interested in foreign stocks, but then there are very decent companies on the Nigerian Stock Exchange that you can also pick up a lot of decent stocks. And to disappoint a lot of you that don't see so much good in Nigeria, I mean, the Nigerian Stock Exchange is one of the best performing equity market globally now. I can be sure that in the last 1 month, we must have ranked top 5 in the world. So it's been very profitable. If you've been a part of the Nigerian equity market in the last 1 month, it's been very, very profitable. And why that? Typically, when you have low yields, like I noted when I started my conversation, typically when you have low yields, for example, you used to get as much as 15% with treasury bills, government treasury bills, with no risk. But now your money has matured and you want to invest, and the options are almost not there, because the same investment that you were getting as much as 15% for wants to give you 0.035%. So you are faced with reinvestment risk, and there are, in terms of structure, very few options available to you. So that's why in the last 1 month now, like a lot of people are coming into the equity market. Because of that, there's so much serious activities and capital gain. There are some stocks in the last 1 month, they've done over 80%. So I mean, when you tick all those your 3 boxes, there are quite a number of decent companies in Nigeria that you may want to consider as far as equity investment is concerned. Yeah, that's my addition. I think the next question.
Thank you very much. I have a I have a question before we go to the next question, just to make this a bit more interactive. I want to ask the participants. So if you had a chance to invest in a Nigerian startup, which one would it be? Like, which one would you invest in today? Okay, maybe please just drop it on the chat. I just want to see where your head's at.
I like that question, because so it's easy to point fingers at Nigerian billionaires. They are not looking at Nigerian startups. So let's see if we are looking at Nigerian startups.
Yeah, like, so if you had the opportunity, I mean, a lot of times, the investment floor of the round would probably prevent individual investors like this from participating. But if you had the opportunity, so I can see a lot of Paystax and Florida Wave, and so someone says Jumia. So even here is still fintechs. Flying Doctor, Piggyvest. I love Piggyvest, and it's not because I'm friends with the founders, but I think that if there was a company that could easily raise money from their users, I think it would be Piggyvest.
The numbers are awesome.
Yeah, the brilliant company. Awesome. Some motors for electric vehicles. Okay, all right. Okay. Yes, we can go to the next question. Sorry, I hijacked the session, moderator.
Yeah, I think that's a Emmanuel's question, right?
That's fine. That's really fine. Okay, that makes it more interactive. Okay, so I'll just quickly take Emmanuel's question so we don't actually skip that. For a startup with huge capital requirements, for example, the manufacturing company, and the basic bootstrapping process of family and friends and personal financing won't be able to make reasonable impact, how would such a company go about sourcing investments?
Ibrahim, sorry. Let me. I'm interested in that question. So For a startup,
Okay, then sorry, since you're interested in that, I should also mention. So we have this participant, and he always mentions how that it's very difficult getting finance for
Arinze.
Barright precisely. And so, the demand is clear, the deposit is clear, but then getting investment opportunities in large quantities is actually very difficult. It just seems impossible. It just looks almost impossible. And getting back to family and friends is not really an option here. So I think that could be an addition to that question.
Yes, I don't know if that was a question because we lost you for some seconds. So I didn't get the complete context.
Okay, so the question is in such cases where you are maybe, I think it's a case whereby the business doesn't look like beautiful to investors, like it's not fintech, it's not health tech. That's the perspective I'm actually coming from. Can you hear me?
We can hear clearly.
Okay, so that's actually perspective my question was coming from, but you could actually focus more on Emmanuel's question.
Oh, okay. Yeah, for a startup with huge capital requirements, manufacturing company, and the basic bootstrapping process of family and friends and personal financing won't be able to make a reasonable impact. How would such a company go about sourcing investment? Huge capital requirements, manufacturing company. Yeah, so what I'm interested in this question is like the definition of your company, like, because typically I think we have a general notion that if you're just starting a business and you're probably under 20 or under 30, most likely you're dealing with a startup. But sorry, like, so there are some unique requirements that make a company a startup. So not necessarily you're starting a company, a small business, or you're starting a company generally, then like it falls into the startup in that context brackets. Because typically, startups are their equipment lights. They usually have active users, and they can, the growth initially can be exponential. So if you don't fall into that category, you may have issues. So why am I saying that? So we've had situations whereby someone comes to us and is more of a social development company, and you're looking for startup fundraising. Like, you can't get startup fundraising in that regard. I'm trying to get an example now, but the point I'm trying to make is that it should conveniently and consciously define the company you want to start so that you can know where you should go to for funds. So there are some people, the funds they need is more with the Bank of Industries of this world or Bank of Agriculture. There are some companies, even though they are starting up, but the kind of funds they need is not with the Y Combinators of this world. And so in that regard, because I'm looking at this question, huge capital requirement, manufacturing company, and basic bootstrapping process of family and friends. Ibraheem, this is where you come in now.
Thank you. So I think that for any company, what you need to look at.
Are you with us here, Ibrahim?
Can you not hear me?
Okay, I could not.
Oh, okay.
Sorry.
Can you hear me now?
Clearly.
Right. So I was saying that when you want to raise capital, right? So if you want to raise capital from, say you want to raise capital from VCs, because there are actually top VCs that invest in manufacturing companies. What you need to look for are investors that are investing in the space that you operate, right? Because it'll be harder to convince investors or VCs that are not playing in the vertical that you operate to invest in your business than the ones that are already playing in that space. So you have VCs that are sector agnostic, right, and will invest anywhere, right? And you have some that would say only investing in fintechs, or only investing in health tech, or only investing in prop tech, in real estate, or only investing in manufacturing. It would then be very critical for you to do your research and find the ones that are investing in your space, and be able to send a pitch deck, to one of them to start contact, and that'll be a starting point for a manufacturing business. But then there are many interesting manufacturing companies. It also depends on what you're manufacturing, right? Is it an FMCG business, right? Because there are FMCG businesses that I would say that are very interesting and would easily raise capital, a ton of capital. A company that, if they ever went to market to raise money from retail investors, that I would jump out is Wilson Lemonade, because I really like that business. Well, I loved it 2 years ago. I'm not really sure what they're doing right now. But it's a business that had like super growth. So it depends on what you're manufacturing as well. Look at investors that are investing in your space and try to make contact. Or you can go, if it's a big manufacturing company and you're running out of funds because you've been bootstrapping, and you have traction, so you have revenue, and you can go the private equity route as well. Just It would be very material for you to look for investors that are interested in your space, because it makes the conversation 100 times easier.
All right. So I would have loved to take Maiwa, but then I'll rather give Jay a chance. Oh, yeah, Maiwa, is a question short because you spoke already. Okay, let's just take Maiwa. Go ahead.
Thank you. It's a short one. So I'll start by saying I work in a VC firm. So, I can relate to most of the questions being asked around due diligence. Around them, you have to look for investors, either that are sector agnostic or those that, have a focus on whatever sector it is that you operate in. So the question I've wanted to ask since is to Azeez. So I know he mentioned earlier on about the growth board that is supposed to cater to SMEs and startup. So the question will be that, how NSC, or the body that puts that together, what were they? Okay, so don't let me phrase it now. Let me just try and rephrase. So the point is, for SMEs, there are lots of things you need to do. You have to check all manner of things, due diligence and co, before you make up your mind to actually invest. So do we really see this growth board turning out to be a success? Would people really be attracted to invest, knowing fully that these are high risk investments? There's a high probability of losing your investment. More so, some other companies on NSC, even if they're not doing so well, some still struggle to pay dividends. So at least there's something investors are looking forward to. But when you talk about startup SMEs, you're not even looking at dividends in the next maybe 5, 6, or 7 years. So I don't know the attraction that would be for investors to invest in SMEs with all the huge risk that goes into that kind of investment. Thank you.
Yeah, thank you, Maiwa. And it's good to hear that you work with a VC. At least we can get more insights from you as far as VCs are concerned. Yeah, as far as the growth board is concerned, it can actually be a success, a good success. Because in Nigerian Stock Exchange, unlike what people know, that when they hear anything Nigerian institution, it just, typically an institution that starts in Nigeria, it just feels like a government thing. But the Nigerian Stock Exchange does not work like a typical government thing that you think. It's actually not a government thing. is an exchange. It's a platform owned by dealing members who operate in the private sector. So it's not like government owns the Nigerian Stock Exchange itself. So why am I saying that? The Nigerian Stock Exchange is like young people driven, technology driven, regulation driven. Like someone mentioned earlier, said that the transparency issue with investing in Nigerian equities via the Nigerian Stock Exchange. And I was like, yeah, except if we are still talking about 30 years ago, or when we're talking about transparency, as far as the Nigerian Stock Exchange is concerned, it is at that level of whatever stock exchange you can mention globally. When you talk about global competition, like they are globally competitive. I mean, one of the ways you can measure global competitiveness as far as exchanges are concerned is the relationship they have with other exchanges. Like, for example, the Nigerian Stock Exchange has a relationship with London Stock Exchange. Why am I saying that? So you have companies who have dual listing. They are listed on the London Stock Exchange, and they are also listed on the Nigerian Stock Exchange. We have Seplat of this world, a Nigerian company that is listed on the London Stock Exchange and also listed on the Nigerian Stock Exchange. So when you have that kind of relationship, you know that that kind of company is at that level to operate and participate as far as equity capital or debt capital raising is concerned. So in that regard, you can be sure that the growth board, if you meet the requirement at the startup, so to list on the Nigerian Stock Exchange via the growth board, you have two options. You can come in as an entry company, or you have the standard listing requirement on that growth board. Typically, this board is targeting medium to established businesses. Typically, of course, even if you're a private company, at any point you're going public, you need to become a public limited liability company. So, I mean, your board and co will determine that if you have to go public at any point in time, whether you're small, you're medium or big, you have to go public. So it's one of the requirements of the growth board. Aside from the fact that it should be a medium to established business, it must be a public limited liability company. Then in terms of size of capital, the exchange is interested in companies between 50 million to 4 billion. And that's very, very decent and reasonable because when you talk about startups, the common valuation is usually around that. Unlike the premium board, which can have minimum to be on the premium board is 200 billion. So we are talking about the Dangote of this board. So unlike the growth board, you can also list like a Dangote through the growth board. If you are valued maybe between 50 million and 4 billion, then there's also something that when you come and list on an exchange, there's a requirement. One of the requirements is what is called public float. That is the required number of your shares that must be available for the public to trade with. So, for example, I'm Azeez. We have Azeez and Ibraheem, two founders, and they both own 50% of the company each, and they want to come and list on the exchange. They will have to surrender about 10 to 15% of their holdings so that the public can also take part in. Then you usually have continuing obligations and support services. I mean, as far as these requirements are concerned, they are very, very light, unlike if we're listing on the main and premium board. And I mean, I've heard startups say that they are not sure that the stock exchange considered founders themselves when they're coming with the requirement for growth board. But it's interesting to know that when the exchange was setting up this growth board, they were actually discussing with the FinTech Association of Nigeria. I think Dr. Aina. So it was in conjunction with the FinTech Association of Nigeria that they came up with these requirements. And it's not like these requirements are rigid. The exchange is willing to be flexible depending on the requirements of startups and the general capital environment. So it can work, and the requirements compared to main and premium board, from my experience, it can work. Talking about risk, I mean, equity generally is risky. And like we all know, the higher the risk, the higher the return. So if you say startups are riskier, then of course the return is higher too. I mean, so you can do over 300% with a startup in less than 2 years, and you can lose all your capital in less than a year. So the higher the risk, the higher the return. So it depends on the appetite. And usually, for example, most of the startups, their users are young people. They are youths, less than 20, less than 25, less than 30. They are willing to put their money where their mouth is, as far as the startups are concerned. So I believe that as soon as we start seeing these startups listed on the Nigerian Stock Exchange, youths will follow those startups to be there. I believe that's true. We just need to get them there. Yeah, thank you.
Yeah, thank you so much. Thank you.
Okay, to Joe. Joe, you can ask your question. Our faculties, we have one question on the chat. Someone is asking that strategy or approach worked in Nigeria. Okay, Joe, ask your question. Go ahead. Just to mention that, because it's a short one.
Good evening, everyone. My question is, with regard to company trying to investment, what, from the expert point of view or standpoint, what bookkeeping or accounting requirements best work? I mean, what is the basic? Let me try and break it down. I know in some cases, some startups or new companies don't even have a proper books or aligned documents when it comes to financial documentation, while some have it up to the point of having a chartered accountant or auditors go through it. So from your experience, what do you think actually flies the most for some of these investors? That's the first part. While the other part is also from experience, which of these three areas actually attracts investors the most as far as the balance sheet is concerned? Is it companies who are stronger in assets, or companies who do more of GMV, they have a lot of gross sales, or companies who have a lot of profit? So I think the questions are interwoven in some sense. So that's my question. Thank you very much.
Yeah, Ibrahim, I still here.
I am here. I missed the first part of the question because he was faint a little bit. And I also didn't know if it was directed at me or directed at yourself.
Yeah, so I mean the accounting parts, like I think you have to pay for consulting for that. It's not part of capital market, right?
And also I have a hard stop at 2:15. Sorry, I think that's 8:15, right?
Okay.
I have a hard stop at 8:15.
Okay, that's noted. Oh.
So Ibrahim, you can take the parts that you had.
Okay. In terms of what is important, if it's GMV, if it's profit, I think it depends on the business, right? I think it depends on the business. Well, for every business, the profit is important, right? But there are companies that have raised money, and on their investment memo, you would see that they say that they don't know if they would ever be profitable, and they make a ton of money, right? Snapchat. I think even Uber, at the point where they were going public, he wrote it there that they didn't know if they were ever going to be profitable. So it depends on the business. For an e-commerce business, GMV is important. For a payment processing business, TPV is important. So how much are you processing? Because it's from what you're processing that you're earning, right? But for every business, the profit is important. In terms of what you should track, I don't think that there's any investor that has ever complained from having too many numbers, right? What investors will complain of would be having too little numbers, so you don't have as much metric that you're tracking. So again, in terms of what is important, I think it depends on the business and the vertical that the business is operating in. A Jumia, for example, would be tracking their GMV because it's an e-commerce company, and they're looking at the GMV, as well as their revenue. So what percentage of that has actually been sold, right? And how much are you making from what has been sold? From a payments company, total process value. So how much are you processing? How much of that is coming to you as revenue? But I know that investors are a lot of investors, when they're investing in startups, don't look too much at the profit, because a startup burns a lot of cash in chasing growth, right? So they probably look more at the top line than the bottom line. So again, it depends on your business. But if you're buying and selling, I want to see how much of that is coming back as profit.
Okay, so Mr. Ibrahim, I wanted to confirm what you said earlier. That would mean you'll be leaving the session now, right?
I think so. And I have to apologize. I was told it was between 7 to 8.
Okay, so you have to now.
I mean, I have. How long is the session for?
It's actually ending in another 5 to 10 minutes. It's because we have 2 faculties. That's why usually it's ending.
Okay, I'll stay back. I'll stay back.
Okay.
I'll stay back.
Azeez, you're going to contribute to that question. Thank you very much, faculty. We could actually go ahead, but I just wanted to confirm so I don't, we don't interrupt your schedule, because it's actually fine if you leave the session now. We've had so much from you. It's very fine.
Because I do.
Yes.
I actually have a meeting that I need to be at, and I should.
Please be at the meeting. Please do be at the meeting, faculty.
Thank you very much for inviting me to discuss this. I'm so sorry that I have to drop off. And it was because I was told that it was 7 to 8. And I had a great time discussing and responding to the questions. Thank you so much.
Yeah, thank you so much, Mr. Ibrahim. Yeah, thank you very much.
So I think
okay, over to you, Mr. Azeez.
Yeah, the other part of the person that talks about accounting, right? So I understand that your reservation. I mean, typically for founders, so you're still struggling to put your ideas together. You don't want to start incurring costs and things like that. Yeah. So as part of the bootstrapping, I mean, bootstrapping does not necessarily mean that you are trying to use your funds, but then you can also be using the resources available to you. Resources I mean, maybe your network. You have accountants in your network. You have a friend that you trust so much. If you look at the story of what's his name? The founder of Farm Crowdy, Onyeka, right? Yeah. So if you look at the story, you see that he had this power that's always been an accountant, and is also part of their finance team presently. So he can have friends that can be in charge of your finances. Like, just tell them that, come guys, I know this is going to be big. I just need your trust now and your effort. Don't worry. Just have conversations with them at that level. But the most important thing is that, please, no matter how young your company is, please let someone be there to take care of your numbers. Because we've seen cases whereby, I mean, startups, they never get to achieve their full or potentials or the possibilities in front of them just because they never had someone that was taking care of the numbers. Or when they wanted to negotiate at some point, just because they didn't have someone taking care of their numbers. And not just anyone taking care of your numbers. If you can have an accountant in your network, a chartered accountant, sorry, within your network who has experience around small businesses and can make projections, have an idea of financial advisory. I mean, it's good you have an accountant, someone who takes care of finances. You have a financial advisor somewhere who can give you insights as to capital raising is better. And back to the growth board story. I mean, even the stock exchange recognizes the fact that unlike for senior businesses or mature businesses where there's a requirement that you must have an auditor, you must have this, you must have this. For the growth board level, it is very light. The requirements are very light. You can outsource them. They can be support services. They can be discounted affiliates, kind of, and even your advisor that is going to, because typically when you want to come to the exchange on growth board, you should have an advisor, and usually even these advisors, they don't collect money, and they can offer some of these support services to you. But the most important thing is that please, that accounts for your books or advises you as far as financing is concerned. Aside from the fact that I'm a capital market person, I started as an accountant. For most of my career, I've been an accountant. So I understand. I've seen companies go down just because they didn't have the books. So I advise you get an accountant within your network. Or you really don't have to pay. Start paying now, but then just make sure you get someone that's responsible for your books and someone that is good enough, not just anybody. Thank you.
Thank you so
Okay.
much.
Thank you so much, faculty.
Yes.
If you do
So
have
I
other
don't have
questions.
more than 5 minutes too.
Yeah, we're actually rounding up in the next 3 minutes. I wanted to point your attention back to that question. I'm asking that would Warren Buffett's approach work in Nigeria?
So what's Warren Buffett's approach? Let's start from
I
there.
think Fagade would have to answer that. Fagade, over to you.
I mean, so what?
Yeah, I can take that. Warren Buffett is more or less a long-term strategy, but if you take a look at Nigeria Stock Exchange, if you use that approach, you're going to lose big time. So if you trend in the past 10 years and you invested possibly in Nigeria Stock Exchange, you possibly, wouldn't make, excess of 20-30%. That's not money for 10 years, really. That's just what I mean by that. Yeah,
I understand your context very well, and you're actually very correct. But then, realistically, you may not even make anything. I mean, you're even very decent with the return you offer. You may not even make anything. But then there are still stocks that you can apply Warren Buffett's strategy, and you can be sure that over time you still get your value. I mean, look at Nestle. Nestle in the last 10 years, look at what it's done. I mean, Dangote too, it's, if you're going to apply Warren Buffett, you can take Dangote too. The reality is that, so the capital market is a reflection of the economy. So I understand when people complain that, okay, fine, I bought a particular stock, it was 44 Naira 10 years ago, now it is now trading at 10 Naira and stuff like that. I mean, look at between now and then, how many recessions we've had. How many recessions have they had in the United States of America that you want to compare Nigeria to? So we totally understand your context when you are worried about coming into Nigerian capital market, because, I mean, you're scared of the long term. But the equity market is a long term, by the way. So it's not like it's a 10-year stock, like a bond kind of. So it's still over a long period of time, depending on the kind of financial advisors you have, over a very long period of time, you will still make very decent returns in the Nigerian capital market. I mean, as far as equity is concerned, nothing is guaranteed, right? But then in the Nigerian capital market, you can still, over a long period of time, you can still get as much as 100, 200%, 300%, depending on your financial advisors. So there are points where, okay, fine, the economy is misbehaving. You're like, okay, fine, your financial advisor calls you. It's called Mr. Fagade. Okay, we bought stock at 10 Naira, and our investment horizon, as discussed, is supposed to be 10 years. But this stock presently, you bought it 10 Naira. 3 years after, it's about 15 Naira. from what the economy is saying, we are looking at a recession. What if you sell now, hold your cash? We'll pass that recession, that you come in again. But typically, what some of us do is that we buy the stocks 2020, then we close everything, close all relationship, then you wait 2030 just to see your stocks wait. So it's, I mean, you need to stay very close to your investments. With that, you make very good values. I mean, I don't think return is really a challenge in the Nigerian capital market. I think most of the time it is trust and transparency. And I can confirm to you that as far as transparency, trust is concerned, we are one of the best globally. I mean, we have gone past that stage. So every market, like every country, they have stages. We have gone past that stage where you invest in the Nigerian capital market, and they say insider trading. Some people have access to information, and they say there's nothing like that. There's absolutely nothing like that. So you can be sure that you invest in a Nigerian company because of the fundamentals, and you're willing to take the risk over a particular period of time. You can actually achieve that if you have good financial advisors.
Okay,
look at, for example, I'll give an example. Sorry, Azeez, I'll give an example. Look at Nigerian banks, for example. So I've heard people say Nigerian banks is, Nigerian banks are, Nigerian banks, they don't do it. But then our banks, as far as equity performance is concerned, they are one of the best globally. I remember when coronavirus started, so you had UK regulators telling banks not to pay dividend on their earnings of 31st December 2019. So South Africa, UK, they sounded a notice to companies, banks in there, so that they will have enough capital to absorb the shock from COVID-19. But then Nigerian banks, they pay 31st December dividend. They pay half-year dividend. That is outstanding. And these are decent yields. You don't get up to 5-10% yield like easily globally. You don't. You probably get 1-2%, but you can get decent yields in Nigeria. So again, it depends on your financial advisors and how close you are to them. But the Nigerian Stock Exchange as a marketplace is very, very, very decent. And you can trust that over time you'll get value for your investment, depending on what you are investing in and your investment objectives. Yeah, thank you.
Okay, thank you very much, Mr. Faculty. That's Mr. Azeez Lawal, precisely. I'm trying to help you keep to time. So with that, would actually come to the end of the session. On that note, any closing notes for us, Faculty?
Yeah, I have to say that like it's been interesting, right? Awesome. I think I've made 2 friends now. Mayowa Chigoze. I'll be happy to talk to you guys after now. Like, yeah, I've seen a lot of gentle faces too. Emmanuel, John, Chioma. So it's been an awesome session. Thank you for your patience. Yeah, more than anything, we all need to work on how we can unlock institutional capital. There's a lot of money in this country to turn this country around. There's a lot of capital in this country. Like, there is a lot of capital in this country to turn this country around. So we have to trust that there is that capital somewhere, and we all have to find a way to unlock it. Because I can tell you now that in any investment house or finance houses in Nigeria, most of the senior people, the thinkers, they are running around now. Why? Because they have a lot of money and they don't know where to put them. They don't know where to invest them. Like, I can tell you that is the problem now. It is a problem that is bigger than anything. And guess what? The government knows that there is that problem, that there's so much money in the system. And the government is finding a way to tap into those monies. So it's a game of who gets there first. Is it the startups? Is it the small companies? Is it decent companies? Or is it government? So we need people who have very decent ideas, who have good history, who have good people around them, and have the capacity to take capital. So there's a lot of money in this country, a lot of money to develop whatever level we want to get to. So it's our responsibility to find a way to unlock those capital for our businesses and our ideas. Yeah, thank you, Azeez.
Thank you very much, Mr. Azeez. Thank you so much for this session. And also to Mr. Ibrahim, thank you so much. It's been an insightful 1 hour, 30 minutes with you guys. And I really have learned a lot. I really have. I really have. And I must mention I've not recovered from the other session we had with you on capital markets. And thank you to everyone that made out time to attend today's session. The floor is open. You could unmute and then say a word to faculty.
Thank you so much, faculty. I really appreciate.
Thank you so much, faculty. I really appreciate. This is a masterpiece.
Thank you, Mr. Lawal. It was a nice time.
Yeah, thank you. Feel free to reach out. I'm leaving my email address here. Feel free to reach out. Advisory
thank you very much. Take care.
Advisory is free.
Oh, thank you so much.
Thanks, everyone.
Thanks, faculty.
Yeah, bye-bye.
We're waiting for the email address. It's not here yet. Okay, so we have it here. I wouldn't be reciting that in audio. Okay, so I've copied that. I would also share again on the platform for those that will, Azeez@trustbank.com. Okay, thank you very much, faculty. It really was an insightful session with you and also Mr. Ibrahim. We have a great day. I see you at the office. I do hope you get home. Bye, everyone.
Like I said, that there is money. We are looking for to put it. So it's late nights now to find products. It's our responsibility really to find a way to get to this cash. There's a lot of money in Nigeria to unlock whatever potential that we have to unlock. It's just trust and the process really, as far as responsibility to present yourself really. Once again, thank you very much. Have a great